the advantages and disadvantages of a consumer proposal. If you're having trouble making ends meet every month, you're not alone. A recent study by the credit reporting company TransUnion has determined that nearly 1/3 of Canadians don't feel they can pay their bills in full. So what is a hardworking family to do if they find themselves in this situation? One option would be a consumer proposal. This debt repayment tool allows you to write off most unsecured debt and consolidate the rest. There are some advantages and disadvantages of a consumer proposal to consider. Let's take a look at them compared to some other debt relief options. Advantages and disadvantages of a consumer proposal versus the status quo. The status quo, maintaining your current state of affairs while trying to get ahead of your bills, is how many Canadians deal with overwhelming debt. And it rarely works. Even missing 1 month's worth of payments on your unsecured debt could set you so far behind that future payments are outside of your reach financially. A consumer proposal can relieve you of this endless cycle of paying normal and compound interest on your unsecured debt. While there are some disadvantages of a consumer proposal when compared to maintaining the status quo, the advantages usually far outweigh them for those who are struggling. Let's take a look. Advantages of a consumer proposal versus the status quo. Reduced debt. Your licensed insolvency trustee will work with you and your creditors to negotiate reducing the amount of money you owe to your creditors. Sometimes by as much as 80%. Fewer monthly payments. Making monthly payments to pay off your unsecured debt could take you years, especially if you're only making minimal monthly payments. For example, if you have a credit card balance of $5,000 at 18% interest, and you're making monthly payments of $100 on that debt, it would take you 94 months to pay it off. By entering into a consumer proposal, that credit card could be completely paid off in 36 to 60 months. Little to no interest payments on debt. Using the above scenario, after 94 months of paying that $5,000 in credit card debt, you will have actually paid $9,311. $4,311 of which will be interest payments. An accepted consumer proposal would eliminate all of the interest on this debt, keeping those interest payments in your pocket. Little to no interest payments on debt. No more harassing phone calls. If you're full of dread collecting the mail, or every time the phone rings, due to unscrupulous collection practices, a consumer proposal will put an end to that. Once your consumer proposal is filed by your licensed insolvency trustee, your creditors will be notified. After this notification, they will be forbidden to contact you in any way to collect their debt. No more strong-arm tactics. After a few months of not making full payments on your unsecured debt, one or more creditors may decide to up the stakes. They can do this by asking a court to make a judgment against you. And they'll most likely succeed. This could mean garnishing your wages and seizing your assets. After entering into a consumer proposal, you will be protected from these strong-arm debt collection tactics. Disadvantages of a consumer proposal versus the status quo. Repayment rules less forgiving. If you fall 3 payments behind on your consumer proposal, it's more than likely that your proposal will be considered annulled. This will restore all of your creditors' rights, and they can begin the collection process again. You must monitor your upcoming consumer proposal payments and ensure they are made. Consumer proposals go on your credit report. A consumer proposal will be on your credit report for a maximum of 6 years from its filing or 3 years from the last payment, whichever comes first. Advantages and disadvantages of a consumer proposal versus a debt consolidation loan. For individuals starting to fall behind on numerous monthly payments, a debt consolidation loan may be an option. Let's take a look at some of the pros and cons of a consumer proposal versus a debt consolidation loan. Advantages of a consumer proposal versus a debt consolidation loan. Consumer proposal doesn't require good credit. A debt consolidation loan is still an unsecured loan, so you may not qualify for one if you have bad credit. A consumer proposal can still be entered into with good or bad credit. Little to no interest payments with a consumer proposal. As opposed to a debt consolidation loan, which includes interest, a consumer proposal is paid back with absolutely no interest. This will allow you to pay off your debt without the added expense of interest payments. A consumer proposal can eliminate some debt. While a debt consolidation loan will make for a lower monthly payment and fewer creditors, you're basically moving debt from one creditor to another. With a consumer proposal, most of your unsecured debt, in some cases up to 80%, can be outright forgiven. Disadvantages of a consumer proposal versus a debt consolidation loan. Credit rating. If you're behind on monthly payments yet still maintain a healthy credit rating, a consumer proposal will put that in jeopardy. Secured debt unaffected by a consumer proposal. Car loans are considered secured debt and are not covered by a consumer proposal. If you're making high-interest payments on one or more vehicles, a debt consolidation loan may be a better option to restructure those high-interest payments. Other debt. A consumer proposal doesn't cover some debts, such as child support arrears, court fees, and unpaid property taxes. Depending on the debt consolidation loan, you may be able to wrap these payments into a more manageable monthly payment. Advantages and disadvantages of a consumer proposal versus bankruptcy. If you're drowning in monthly payments you don't think you can make, a consumer proposal or bankruptcy may be the only way out. Let's look at the advantages and the disadvantages of a consumer proposal versus bankruptcy. Advantages of a consumer proposal versus bankruptcy. Consumer proposals are discharged from credit report quicker. A consumer proposal will be off your credit report within a maximum of 6 years from the filing date. It could take 6 or 14 years after the date of discharge for a bankruptcy to be taken off your credit report. This depends on if you have been bankrupt before. Keep your tax refunds. If you file for bankruptcy, your tax refunds and credits will be withheld and used to pay off your creditors. A consumer proposal allows you to keep your tax refunds and credits to use however you like. Keep your assets with a consumer proposal. With a consumer proposal, you will be able to keep all of your assets. After filing for bankruptcy, your assets will be vested with your licensed insolvency trustee. You do have the option, though, to purchase these assets back from the trustee. There are no monthly reports. After filing for bankruptcy, you will be required to report your income and expenses to your licensed insolvency trustee every month you're in bankruptcy. This will be used to determine if your monthly bankruptcy payments will be increased or extended. There are no monthly reporting requirements with a consumer proposal. Consumer proposals have one set payment. With a consumer proposal, your licensed insolvency trustee will help you negotiate one set payment to cover your unsecured debts. This payment will stay the same regardless if your financial situation improves. If your income improves substantially before your bankruptcy is discharged, your bankruptcy can become significantly more costly and potentially be extended. Monthly payments are usually cheaper. Let's assume your licensed insolvency trustee is able to help you negotiate all of your debt down to $10,000 in a consumer proposal, and the alternative is you could file a bankruptcy and only pay $7,000. Since consumer proposals are stretched out over a longer period of time, your monthly payments for a consumer proposal will be less than bankruptcy. For example, if through bankruptcy you would pay $7,000 due to surplus income, and you have not been bankrupt before, your monthly payments will be $333 per month. An accepted consumer proposal whereby you pay back $10,000 would cost you $167 a month. Disadvantages of a consumer proposal versus bankruptcy. Your creditors could vote down your consumer proposal. In order for a consumer proposal to be successful, your creditors must agree to the terms. If some of your largest creditors, based on the amount owed, don't feel they're getting enough money, they could vote against approving your consumer proposal. At least 50% of your creditors, by dollar value, must agree to your consumer proposal for it to pass. Unless your creditors suspect fraud, there's nothing they can do to stop you from filing for bankruptcy. Consumer proposals take longer to settle. Bankruptcy can be discharged anywhere between 9 to 21 months for your first bankruptcy. A consumer proposal takes considerably longer to settle, lasting anywhere from 36 to 60 months before being discharged. That being said, there are no penalties for paying off your consumer proposal early if you can afford to do so. Consumer proposal examples. To better understand the advantages and disadvantages of a consumer proposal, let's examine a few consumer proposal examples. For privacy, these examples do not represent real scenarios but are a good example of what can be done with a consumer proposal. Consumer proposal example number 1. Sarah is a single professional with $25,000 in assets and $40,000 in secured debt. Let's take a look at her finances before her consumer proposal. Sarah's assets. $10,000, her car, which is paid in full. $15,000, registered retirement savings plan, RRSP. Sarah's debts. $30,000, credit card debt. $10,000, payday loan. Sarah's total monthly payment on her debts. $1,200. In this consumer proposal example, Sarah's lit was able to assist in negotiating with her creditors to drop all of her interest payments and reduce her debt owed from $40,000 to $20,000 to be paid back interest-free over 60 months. Sarah was able to keep all of her assets. Her monthly payments dropped from $1,200 to $333 per month, and her debt was cut in half. Best yet, Sarah no longer has to deal with creditor calls or harassment. Consumer proposal example number 2. Paul and Natasha are a married couple with a home, 2 cars, and a lot of debt they're unable to repay. Let's take a look at their finances before their consumer proposal. Paul and Natasha's assets. $300,000, their home is appraised at $300,000. And they have a $275,000 mortgage. $30,000, the value of the 2 cars that they own outright. $8,000, household furnishings. Paul and Natasha's debts. $50,000, credit card debt. $10,000, personal loan. $40,000, 10-year-old student loans. Paul and Natasha's total monthly payment on their unsecured debts. $2,200. In this consumer proposal example, Paul and Natasha's assets remain untouched. They are permitted to keep their home, both cars, and household furnishings. Their $275,000 mortgage remains unchanged. Their LIT was able to help negotiate their credit card, personal loan, and student loan debt from $100,000 to $30,000. Since Natasha's school loan is more than 7 years old, the debt could be reduced in a consumer proposal. They will now repay that $30,000 interest-free over 5 years. Their new monthly payment will be $500 a month, which is substantially less than their previous monthly payment of $2,200 a month. Consumer proposal example number 3. Alex is a self-employed mechanic. Business has been slow, and he's been unable to meet his monthly obligations. Let's take a quick look at his finances before his consumer proposal. Alex's assets. $40,000, tools and equipment, retail value. $10,000, inventory. $20,000, commercial van, paid in full. Alex's debts. $60,000, unsecured business loan. $30,000, debt to suppliers. $30,000, credit card cash advances. Alex's total monthly payment on his debts. $3,900. In this consumer proposal example, Alex's lit was able to negotiate his debt from $120,000 down to $50,000. Instead of paying $3,900 a month in debt repayment, his new monthly, interest-free, payment is $833. Since consumer proposals offer asset protection, Alex was able to keep his van, all of his tools and equipment, as well as his inventory on hand. This has allowed Alex to focus on his business, without the fear of creditor collections or garnishments. Weighing the advantages and disadvantages of a consumer proposal. Everyone's situation is different. If you're unsure which route to take, Powell Associates Ltd. can help. We're committed to helping individuals find the best option for their individual needs. Contact us today to learn more about the advantages and disadvantages of a consumer proposal, and how you can get your debt under control.